All right, let's dive into MSM International's latest financials. And wow, on the surface, these numbers look absolutely incredible. But the real story? It's kind of hidden just beneath the surface. So let's dig in.
And here it is. This is the number that just makes you stop and stare. A 264.2% increase in net profit. I mean, that is just a massive, headline-grabbing leap in a single year. You see a number like that and you've got to ask, right? How on earth did they manage that?
Okay, so to figure that out, here's how we're going to break it down. First, we'll look at that stunning profit leap itself. Then, we'll check out the revenue engine that was powering the whole thing. After that, we're going to tackle what I'm calling the profitability puzzle. It's a good one. We'll do a quick financial health check, and then wrap up by looking at the challenging road they see ahead. All right, first up, let's put some actual money behind that big percentage. We're talking about a jump in net profit from, just under 500,000 ringgit all the way up to nearly 1.8 million ringgit. That's in just 1 year. It's super impressive for sure. But what's really fascinating, what really gets interesting, is when you compare this huge profit growth to their sales growth. And boom, here it is. This right here is the central mystery we're unpacking today. Just look at these numbers. Revenue, it grew by a very healthy 28.8%. That's great. You'd be happy with that. But the net profit? It grew by over 264%. The profit growth is nearly 10 times the sales growth. That's unusual. It tells you right away that the story isn't as simple as they sold more stuff. Something else, something pretty significant was going on inside the business. So to start solving this little puzzle, we've got to start at the top line, revenue. The company's sales shot up by 11.4 million ringgit. The big question is, where did all that extra cash come from? And you can see it right here. It's a really solid jump. I mean, going from 39.5 million to almost 51 million, that's strong growth for any company, plain and simple. This isn't some lucky break or a one-off fluke. This is a real, significant expansion of their business in just half a year. So let's break that down a bit. This shows us where all that revenue is actually coming from. You can see MSM has a few different pots on the boil. Their OEM contract manufacturing. That's the clear heavyweight, right? It's making up almost half of their total sales. But their kitchen appliances and cleanroom businesses are also pretty big chunks of the pie. It's a nice, healthy mix. Okay, and here's where we get the specifics. The OEM business just exploded, adding 8.3 million ringgit. And get this, the report says most of that was thanks to one new major customer in the energy sector. That one client brought in 5.2 million alone. Wow. Then you have the cleanroom business, also saw a nice jump of 2.5 million, mostly from hospitals expanding and upgrading. F&B was, well, it was steady. So, okay, now we know they sold a lot more, and we know exactly why. But you know what? This actually makes our puzzle even more confusing. Which brings us to part 3, the profitability puzzle. Look, just because you're making more sales doesn't automatically mean you're making more profit on each individual sale. And that's where we have to look at margins. The question is, were these new sales as good, as profitable as the old ones? So before we get to the numbers, just a super quick refresher on what gross profit margin is. It's a really key metric. Basically, it tells you for every dollar or ringgit in sales, how much is left after you pay for the direct costs of making your product. You know, the materials, the labor, all that stuff. The higher the margin, the better. It means you're more efficient. And here comes the plot twist. Their gross profit margin, it actually went down. It slipped from 26.7% to 25%. The company even says it in their report. Those big new cleanroom projects they won, they came with lower profit margins. So think about that. They're actually making a little bit less profit on every single ringgit of sales than they did last year. So this brings us right back to our big question. But now it's even weirder, right? If they are making less money on each sale, how in the world did their final bottom line net profit explode by more than 260%? It doesn't seem to make any sense. And here's the answer. It's really a two-part trick. First, it's all about volume. Yeah, the margin on each sale was a tiny bit lower, but the sheer amount of new sales was so huge that the total gross profit in actual ringgit still went up, a lot, by over 20%. But that was only part of it. The real secret weapon was cost control somewhere else entirely. Their finance costs, so the interest they pay on their loans, they managed to cut those by 12%. It's that 1-2 punch. Massive sales volume combined with smart savings elsewhere, that's what created that insane growth in net profit. Okay, so we've solved the profit puzzle. Pretty cool, right? But hey, a company is more than just one good half-year report. We need to check the foundations. Is the company actually healthy overall? For that, we've got to look at the balance sheet. And this gives us a quick snapshot. Total assets are up, makes sense, they're growing. Total liabilities are also up, but here's the critical part. Their net assets, or equity, which is basically what the company is truly worth, that's also grown from 44.2 million up to 46 million ringgit. So this growth is adding real, tangible value. Now, this, to me, is maybe the most impressive number in this entire report. Think about this. While they were growing the business like crazy by almost 30%, they actually paid down their debt by 3.1 million ringgit. I mean, paying down loans while you're expanding your sales, that is a sign of some seriously strong financial discipline. It really backs up that huge profit number we saw at the start. So the big question is, where do they go from here? After a half year like that, you might expect them to be shouting from the rooftops, right? But actually, the company's own directors are being, well, surprisingly cautious.
And this is a direct quote from their report. They're saying the outlook for the next year remains challenging because of competitive pressures. So even with these great results, they're pointing to tough competition and an uncertain economy. It tells you they are definitely not resting on their laurels. They know there are headwinds coming.
So what's their plan to deal with these challenges? Well, it's a pretty classic three-part strategy. 1, develop new products to stay ahead of the curve. 2, make smart strategic investments in new growth areas. And 3, look for opportunities to expand by buying other companies or partnering up. It's a solid, proactive playbook for a tough market. And so, that leaves us with the big final question. No doubt about it, MSM International delivered a phenomenal set of results, driven by that amazing sales volume and some really smart cost control, all while making their balance sheet even stronger. But, as we just saw, their own leadership is telling us the road ahead is going to be tough. So the key takeaway really is this. Can they actually execute this strategy and turn one incredible performance into long-term sustainable momentum? That's the story we'll all be watching. Thanks for diving into this with me.